Hey everyone, welcome back to CryptoCache. Thank you very much for joining me here. I hope you're having an amazing day. We're going to take a look quickly here at NEAR. And before we do, we usually look at Bitcoin, but today we're going to change it up a little bit. I got a lot of different analysis to get through, so we're just going to quickly go right into the analysis here. Skip the Bitcoin part, and just so you know, Bitcoin's right around 48,800. It had a nice 6% gain yesterday, so a lot of coins today, as a result of that, are taking off because there's Bitcoin made higher highs and higher lows, so essentially we're looking in good shape there in that sense tentatively, where we can see something like this obviously responding well. Okay. Now, if you're new to the channel, not a financial advisor, I just love teaching people how to trade, and this is my full-time job. I love helping you, of course. So feel free to comment below or like, subscribe. Consider joining my community that I have. It's actually a trading community where I have signals that I send out for every single trade that I take, and amazing experience. So be sure to check that out. I'm actually rolling out with the Trading Academy next month, so all of my current members can get abreast on how to become a better trader step by step, every single step of the way. All right, so check that out. Now, here's what funny thing with NEAR, just to kind of throw it out there. Obviously, it's like what happened recently, right? Well, this was if you go down deep and you dive into what this candlestick is telling us, on December 15th, there was like this, I wouldn't say a strange anomaly because it does happen a lot in Bitcoin or cryptocurrency, of course. But what happened was the price jumped up to this level in just 1 minute. It was a 1 minute candlestick that jumped up and all the way back down to $17. So we're not going to use that as part of the Fibonacci retracement levels, just so you know. It's kind of because, again, bit of an anomaly. We're basically going from the highest to the lowest point, so just bear that in mind, okay? Now, furthermore, looking at the one-day chart here, we can see obviously we're up over the 200 and the 50-day simple moving average again. So that's great news. We're well above that. So NEAR should be in good shape to continue to progress upwards. It's got a lot of momentum. We're up over 50 on the RSI as well. And we also had a MACD convergence on the one day. So these are all positive indications of taking a swing trade position to the upside, right? Usually you don't see all this on the one-day chart, but it happened and it's nice. So all in all, looking very good here for NEAR on the one day. Now looking at the 4 hour, I can see we're a bit on the overextended side here, so keep this in mind. We're at a 9+2. So in other words, oftentimes TD sequential will tell us at a 9, you should expect the price to retrace or consolidate. We're basically 2 candlesticks above that. So we're 8 hours into overtime, as I like to call it. So we could see the price get rejected out at this resistance level here at about 1172. That was a previous resistance zone for the price, as you can see. So just keep in mind that the price may come back down. It wouldn't be a terrible thing. It should essentially make lower lows, or sorry, correction. Sorry, it's making a nice higher high right now. So the next low should be a higher low, right? So hypothetically, it should dip down here, or it could even dip down a little bit further and come back up. But the likelihood of that happening is much higher than coming all the way back down. So yes, it's a very good continuation here. We can see that the price is obviously doing very well, but it's had a full 24 to 40 hours worth of just continuation to the upside. And we got to understand that it might have to cool down and calm down soon. Okay, it's just a normal standard thing for any type of trading. So all in all, not terrible, but just note that it's a bit on the overextended side there. And then furthermore, if we were to look at the 1 hour chart and kind of identify where we're at in the cloud, we're obviously free and clear of any price action. The conversion line's above the baseline, and we're well above any cloud. So short story here is that you want to keep your position open if you have one until the lagging span intersects with the price action or the conversion line eventually converts with the baseline, essentially. So those are all good things there in that sense. It doesn't necessarily mean you want to consider taking a position. Don't get me wrong. There's nothing wrong with dollar cost averaging, but if you're trying to take like a long position right now, I wouldn't say you're late to the party, but you're definitely not early, if that makes any sense. So just proceed with caution. I would highly recommend just maybe waiting a little bit longer for the price to come back down a little bit, because once again, we saw an overextension on the 4 hour chart, right? Well, TD sequential is also telling us we're overextended on the 1 hour. When you get more than one time frame reflecting a continuation past a 9, then it's a cause for concern, because the fact that the continuations only happen for so long, right? Like there's no straight lines in any type of trading. I think you probably know that by now. So this is almost a straight line, as you can kind of see. And obviously this being a strong resistance level to about 1172, 1174, you have to respect that, right? Getting overextended into a solid or a very standard resistance or support level will cause the price to respond adversely to that. So in this case, we're overextended, going and traveling into a major resistance level. I think it's likely the price will retrace and pull back some. How far back, it's hard to say. A lot of times when you have higher highs and higher lows, the higher low is higher than the the previous high. In other words, this was the previous high here at 972. So the likelihood of the price coming back down there and bouncing up there is pretty high. In other words, if it comes down that low, it will definitely bounce off that. However, it could very well come back and bounce off a 10. So I'd say, consider adding a limit order somewhere in the range of just say 1060, 1070. That way you get filled when the price comes down there initially, and then maybe have a second limit order right around $10 even. In case it comes down a little bit further, you get both of them filled, and then the price should come back and recover. Okay, that's just kind of what's going on there. But let's go ahead and talk about big picture here, because I know that's why a lot of you want to kind of understand what the potential is for a coin like this. So based on Fibonacci retracement levels, if we were to look, let's actually just go ahead and rewind a little bit and go to the big picture here. Better case scenario for NEAR, again, this is best case scenario. Don't walk away with only hearing this one number, right? But $20.35 is essentially the better case scenario for NEAR. And I would confidently say that that could happen in the near future, right? No pun intended. Just kidding. Actually, that was totally intentional. But what I'm getting at is that that could happen, right, based on its momentum, but it needs to calm down and relax first before it can make that next leg up to break its high, right? Because its high right presently is $13.25. So we have to break that resistance level first in order for that to occur, right? So set your sights on 13.25. You have a profit target in place, maybe do just below, of course. That's best practice, around 13.20. So you can take some profits before the price comes up even further or gets rejected by that resistance. But if we can break above and consolidate about, just say, 13.25, then we're going to be in good shape to see the next leg up as a potential of $20.25. So just bear that in mind. That's very much a strong potential. And the reason why I think that is just based on the fact that we've seen about a 95% increase since Bitcoin has started to retrace. And if you look at this behavior, yes, it sold off, and yes, it continued downwards when Bitcoin did initially. But last, you could say 2 to 3 weeks, ever since Bitcoin hit its lowest points, NEAR has done very well of working its way up the ranks. Okay, yes, it got rejected out here, of course, and kind of retraced, but most coins are not behaving this way, whereas a lot of them are going very synonymous with Bitcoin. So a coin like this that kind of breaks free from Bitcoin, for lack of better terms, is absolutely an indication of something that will take off or continue to, of course. So what I'm going to do, I'm going to set my alert at about 1080. And consider taking an entry at that point, because that seems like a decent place to add to our position if you already have one open, or to consider taking a long position to the upside based on that sentiment. Because heaven forbid, just say the price comes down to 1080 and it comes up to its major resistance level, you still scoop about 20% off of that return, right? So again, a lot of different ways you can kind of approach this, but ultimately NEAR is looking very good. Just note that it's overextended on the short term, but long-term big picture has tremendous more potential here to, in some ways, almost 2x from where it's at presently. I think it's very likely for that to occur. Okay, so just keep that in mind. Understand that NEAR is doing pretty good. We just need to, I would say, let it calm down a little bit to ensure that it can breathe. Because once again, 4-hour and the 1-hour both tell us we're overextended on the TD sequential. Okay, so that's why we set our alerts for the price to come back down and then add to our position. Heaven forbid the price continues to increase and we miss out on our gains. That does happen sometimes, right? We got to be real in the sense that this could continue for much longer, but the likelihood of that happening is fairly low in most cases because of the simple fact that we've got two indicators, or the same indicator twice on two different time frames telling us that we're overextended. I like to listen to that in most cases, so I'd expect some kind of a pullback. It may not be severe, but I would say somewhere between $9 and $10 would be a really good value to consider add to your position, but even 1080 would be decent as well if the price comes down and bounces. So let's pay attention to this. I'll take another look at this here soon. I do appreciate you watching, of course, and hopefully learning a thing or two as well. And if you want, again, a more detailed, thorough, better experience, feel free to join my Patreon community. We're transitioning away from Patreon to a website platform here soon. We'll have a robust membership platform, as well as the fact that all the trading academies, the only one I'm offering is all the content will be available through that for current members. So heads up on that as well. I hope you have a fantastic rest of your day. Thank you so much for your time. We'll see you in the next